Hello everyone, welcome back to my channel on this Monday for another real estate market update. I'm Caitlin McKegg. I am a Phoenix real estate broker if it's your first time here, and if you are not new here, welcome back. Thanks so much for coming to watch these videos every single Monday. So I am always giving an update on what we have going on in the Phoenix real estate market, and things have been changing very quickly as of late. So lots to go through today. I do want to say thank you to the Cromford report. I get a lot of my information from them. I am a subscriber to their data, along with everything else that I share, just what's going on in the economy and kind of the broader picture as well, because that all affects what's happening in our real estate market. So if you're new here, hit that subscribe button and the bell so you can keep up to date on all of these real estate updates and other videos that I post throughout the week. Let's start talking about what's going on in the economy. This past week, we had some big news as it relates to inflation. Unfortunately, it was not good news. I've got the headline right here. Inflation surges 9.1% in June. It's the most since November of 1981. So we were all very hopeful that the CPI number would come out and be lower, or at least, the same as it was the previous month, but unfortunately it went up to 9.1%. So really not good news on the inflation front. This next section here, the Bureau of Labor Statistics, CPI reflected a year-over-year increase of 9.1%, up from the prior 40-year high of 8.6% in May. Economists were expecting June's reading to show an 8.8% increase, according to estimates compiled by Bloomberg. So not good news. The initial reaction to that was that the Fed was going to get extremely aggressive in their next meeting and possibly increase the federal funds rate to 1%. They've been talking about 75 basis points up until now. Then they started talking about a 1% increase. And that's kind of how we ended the week until this weekend. It sounds like they've decided to maybe go back to 75 basis points. They meet on July 27th, so we'll know more at that time. But keep in mind, again, that federal funds rate is not the mortgage interest rates. Those two things are very separate. However, all of this activity in the markets does affect where mortgage rates end up going. And from some sources that I have in the mortgage space, they shared that all of this back and forth this week didn't really do all that much with rates. Kind of ended the week around the same point. They didn't go up significantly or down significantly. So no new crazy news as it relates to mortgage rates. Here's that little headline. They prepare to lift interest rates by another 75 basis points. Again, that's the latest news as of this past weekend. Last week they were talking about a full percent. So we'll see what happens on July 27th, I believe, is when they meet, and see what the reaction is to that. So moving on, let's talk about the listing success rate. So this is a graph from the Cromford report. I shared this a few weeks back, maybe about a month or so ago. And, we're right here with this greenish line, or well, I guess it's more yellow. And this whole time we were kind of like on the same path as we were in 2021. And then we just really started taking a tumble there. And that was about in April, May-ish, around there. Just scribbling all over the place. So then things started to change, and what this is measuring is if a home is listed on the market, that it actually goes through to close rather than expiring or canceling. So the listing success rate is not looking too pretty right now. It's sitting at about 78.2%, and that is headed towards 2005, which is where we were right here. This is the green line. The Cromford report wanted to compare where we were then to today. And we'll see. I mean, it's certainly continuing down that way. I could absolutely see us getting to the base over here where we were at in 2005. But the Cromford report says that this number, about 67%, is the long-term average for the listing success rate. So if we look back in time, that seems to be the long-term average. We're above that right now. But when you get to 67%, they say that 1 in 3 listings will fail to sell. And so we don't have too much further to go. If we get down to 67%, let's see, that's somewhere around here-ish. We're well on our way. We'll see if we hit that and or if we go below that. But keep that in mind if you are thinking of selling your home, because as we head further towards that, your statistics of actually getting a buyer to close goes down quite a bit. That you have only a 1 in 3 chance, or you have a 2 out of 3 chance that it will happen, 1 in 3 that it will fail to sell. So we'll have to keep an eye on this listing success rate. This is certainly a reflection of the softening in our market that we have been seeing. So on that note, let's move on to talk about the monthly average sales price per square foot. So I've talked last week, I gave a list of cities that have had a decrease in their prices when we actually look at pricing, the sales prices, not the list prices, because list prices have been going down for a little bit now. So as we look at the monthly average sales price per square foot, you can see on this graph, it's not looking so pretty. That's definitely headed down. And on May 13th, if we go back in time, around here, we hit a peak of 306 price per square foot was our average price per square foot peak. That has gone down about 4% now. To where we're at today. And that's just been since May. So it hasn't been that long that we've seen this change in our peak of dollar per square foot now to where we stand today, and about a 4% change. So all of those cities that I shared last week have seen, I kind of gave the amounts, the numbers of what their median sales price was previously to where they're at today. But as you look at all the different data, Cromford is now saying it's been about a 4% decrease since we hit the peak in May. So that is certainly showing us that all of these list price decreases that we're having, price cuts, all of that stuff is then now spilling over into our close prices, which makes perfect sense. And as we continue to see aggressive list price cuts and longer days on market and sellers giving concessions, I would imagine that this number is going to continue to fall. So that's the news on sales prices. Let's talk about rentals. I know a lot of you always have questions about rentals, and I don't always have a ton of data on that, but I do have some stuff for you this week. So I'm talking about single family rentals, and we've been seeing an increase in not only the number of rentals on the market, but also a decrease in the amount that these rentals are listed for because we're having more supply. So today we're sitting at about 212, this is just single family homes, rentals on the market. And that average price per square foot for these rentals is about $1.57. Now, last year at this time, we had about 820 rental listings on the market, so much lower options, much fewer options to choose from. And the average price per square foot was about $1.90. So pretty big difference between last year and this year as it relates to single family rentals. Our amount of single family rental listings is up about 145% over the last 12 months. And they're also saying that the average rent price is about 17% less. Now, keep in mind that is looking at the entire mix of single family rentals, all different sizes. So they're not saying that the actual rental rate has gone down 17%. It's actually, it reflects a mix where far more lower price rentals are being listed than we had in 2021. So that's directly from the Cromford report on how they describe that. So that's a little bit of a misleading indicator if you read it the wrong way. But the bottom line of this story is that we have more single family homes listed on the market for rent right now, and they seem to be taking a lower price, or at least listing at a lower dollar per square foot on average than they were last year. So that's the story with rentals. Now let's get into the Cromford Market Index. If you're new here, this is an algorithm that the Cromford Report has created to measure our supply and demand in our market. And any number between 90 to 110 is a balanced market, and anything above 110 is a seller's market, which is where we had been for so long. And anything below 90 is a buyer's market, which we are starting to see come to the surface a bit. So here's where we stand today, 146. Last week, I think it was 160 something. So still seeing a big decline in the CMI. I believe it was still about that like 34-35% decrease week over week. So we actually did not see too much of a change. It's not like we had, a big drop over the last week, which we were seeing some pretty steady decreases for a while. So 146.4, technically, based on the CMI, this is still a seller's market, albeit a weak one. Our demand index is below normal now. It's at 84.4, so anywhere between 90 to 110 is normal. We've dropped out of that. So demand has been falling largely because of interest rates and affordability. And then our supply has continued to increase. That's at 57.6. So supply is we're still low, 40% below normal, 43% below normal for supply, but it has been increasing sharply. We're still seeing about 1,000 listings coming on the market every week. And the number of listings going under contract has decreased severely. So it's giving us this, larger supply on the market than we've seen in a very long time. So for the CMI, this is, like I said, still saying we're in a seller's market, but it depends on where you're at in Phoenix because every city is seeing something a little bit different. Especially, I want to talk about these down here at the bottom. So Maricopa, Queen Creek, and Buckeye. Buckeye is at 89. Buckeye is officially in a buyer's market. And the Cromford Report had been saying for the last few weeks that they thought we were going to be getting there pretty quickly, and they were correct in that. So Buckeye's in a buyer's market. We have Maricopa and Queen Creek. These two have been following quickly behind. They're both still technically balanced, but the Cromford Report believes in the next 1 to 2 weeks, both of those areas are going to be in a buyer's market. So if you're thinking of buying in those areas, yay for you. That pendulum is swinging your way. And if you're a seller or if you have your home listed on the market in those areas right now, I would very much encourage you to take some quick action to get it sold sooner than later, because I don't think that your future is going to get you any more money than you're going to get today as you're listed. So keep that in mind. I have all of these cities here: Phoenix, Surprise, Chandler, Gilbert. All of those, the Cromford Report is saying that they are going to be in a balanced market by the end of August. So that is coming very quickly for all of those cities. And in addition to that, they have all seen a pretty significant change. They went down about 40% on the CMI when we compare month to month. So those have been affected the most in the last, as we look, the changes from last week to this week and this a month ago to today. About 40% change on those cities. So those are moving fast. They're coming pretty quickly behind Maricopa, Queen Creek, and Buckeye. Now I have this line here, this black line, because if you'll notice, all of these 5 are the only cities with a CMI over 150. And the Cromford Report pointed out that just not too long ago, we had 15 cities over 150, and now there's only 5. So pretty hard to have anticipated how quickly all of that was going to move. And I sound like a broken record as I say that, but that's just what's been happening. Everything has moved so quickly. So I wanted to read a little bit of what they're saying about all of this as I was talking about those 5 cities: Peoria, Tempe, Gilbert, Chandler, Surprise, and Phoenix. They're just a week or two away from a balanced market. They've all dropped close to 40%. Based on current trends, these 6 cities will probably be a buyer's market before the end of August. So I think I had said a balanced market as I was writing that down. A buyer's market. So if you are in Phoenix, Surprise, Chandler, Gilbert, Tempe, or Peoria, keep that in mind if you're thinking of selling, or if you're listed on the market thinking that things might get better for you. It sounds like by the end of August, it's going to be a buyer's market according to the Cromford report. And keep in mind, they also said that about Buckeye and they were correct. So here we are. Again, that's assuming that things continue in the same trend that we're seeing now. I don't see anything changing that except for possibly seeing fewer listings come to market. But between now and the end of August, even if we had, just a slow trickle of new listings coming, I still don't think that's going to change the landscape all that much, because we have so many buyers that are sitting on their hands because they can't afford the interest rate or don't want to. So that's really kind of where we're stuck. And then when I had mentioned that 5 of these cities were above 115 or 150 now, and 15 of them were not long ago, it was a month ago. A month ago, this line would have been down here at 15. We have had all of these change significantly over the last month, and now all of them are below 150. So pretty big changes in the CMI. Not surprised, because that is certainly what we're feeling out there. I can share with you guys as an agent out in the field right now, I am seeing all of this. I've had buyers get some really great negotiations completed as it relates to repairs since we're under contract, because sellers don't want to go back on the market to try to get under contract again. They know they won't get a better price. I've seen buyers be able to make offers under list price very easily and actually get their offers accepted. On the listing side, I have sellers who are getting frustrated because they're not getting any activity on their listing, and we've done some different price changes and we're still not getting activity. And with prices changing as fast as they are, it's almost like you have to be ahead of the curve. Doing a price cut today means that you're probably still behind the 8 ball. I'm seeing a lot of listings sitting. I'm seeing a lot of low investor offers. I've been getting those as well on my listings, like $100,000 low. I've entered some of my listings into OfferPad and Open Door just to see what their offers would be, and their offers are about 100,000 below where we are listed at. And 3 months ago, they were ready to pay 30 to 50,000 over. So the landscape has changed significantly. So keep that in mind if you're a buyer, a seller, whatever you're thinking about doing. Just know that everything is very fluid right now. It is very much a moving target. And if you have questions about it, feel free to reach out to me, because I can help talk you through the situation, give you some ideas on what's going on or your best strategy depending on what you're trying to achieve. Thank you for joining me. If you want to find out what your instant home valuation is, look in the description below. I have a link for an instant home valuation there, and you can also search my MLS by clicking the link there as well. And my contact information is there. If you're thinking about buying or selling, I can help you with that. So make sure to keep that in mind too. I'll be back next week with some more interesting information, I'm sure. I'm Caitlin McKegg with the Desert Dreamers team at HomeSmart.